Hi, everyone. It is Peter Kraut of Silver Advisor with another episode of the Pay Dirt podcast, where we interview management of companies that we recommend, but also personally own, track, and report on. And today I am with Jim McDonald, who is president and CEO of Kootenay Silver. Jim, thanks for being with us today.
Yeah, Peter, great to be on the show again. Thank
So,
you.
Jim, thanks for taking some time to talk about some really big news you had recently. It's a landmark PEA on the La Cigarra project. Why don't we start off by talking about the PEA, what sort of the key metrics are, things like the NPV, the net present value, the internal rate of return, the discount rate, your silver price assumptions, and some of the big picture aspects of
Yeah.
it.
Okay, great. Yeah, so the PEA came out it's over a week ago. Really fantastic results and some eye-opening things. I think it's going to be catching the eye of the producers and eventually be catching the eye of investors for sure. When you look at the production profile of the PEA, 14 years of production and tremendous growth upside on top of that. So we envision this thing having many years beyond 14 years even, and then the first 6 years of production or sorry, the first 5 years of production are over 6 million ounces a year. Incredible. So averaged over the 14 years, 4.5 million ounces. So really great. Mine life's really good. Production profiles incredible for a standalone silver producer. You look at some of the mid-sized guys, especially producers, and they might have two or three mines to get that sort of production going. And so this is very significant report out. The price that we used for silver was the consensus, long-term consensus that coming out of banks, which is $50. And uh, and that's what we published on and that gives us a 763 million US NPV after tax with a 41% internal rate of return after tax. So really fantastic numbers there. The discount rate was 5%. And when you looked at a sensitivity at spot price, when we put the release out, the NPV and the spot at that time was 67. So the NPV jumped to just under 1.3 billion with a 64% IRR after tax. Great numbers. So
Absolutely. And this is not even your flagship. So that's quite something. Yeah, I mean, I can imagine that some peers, some competitors, similar and even sort of perhaps different, let's say, categories in this sector will be starting to pay attention very closely. You talked about the silver price assumption, the NPV discount rate, and so on. What are we looking at in terms of the capital cost and the payback period on this?
yeah, so capital cost 332 million, and that includes a crushing plant, flotation, and leaching circuit on the process side. And then the payback, only 1.9 years post-tax.
That's
So
also quite impressive. So yeah, I mean, it makes it pretty robust. There's no
yeah,
question.
yeah, it is. It's basically the studies told us, look, this is a project you need to take forward to a production decision and build, assuming all those studies support that along the way. So those being pre-feasibility, feasibility. And the other thing, 6,000 tons a day. So it's not that big a project. We could go right to feasibility. What we're going to do immediately is drill because there is a zone right within the pit shell of this resource that's we call a gap, the gap zone, under drilled area with potential to add 10 to 20 million more ounces right within the pit shell. So right now in the PEA, this area and the tons in there are given zero value. So you're paying to move it, but you're not getting anything back. So if it's actually got silver in it and continuity across that zone, then that's going to go right to the bottom line of the study, and so we're going to start that in early fall. Do that drilling won't take that long. It's only going to be um, up to a 10,000 meter program. We can probably get there to at least inferred with less than that, and then do a resource update if successful and warranted, and then a quick update on the PEA with stronger numbers if those ounces are there. So that's going to be the first step. Then, of course, we're going to be de-risking. Concurrent with that, start a lot of the de-risking that you would need for your feasibility path. Things like drilling for geotech, optimizing your metallurgy, more metallurgical work, groundwater work to see what the local aquifers are, how much water is there, how much you need to pump, if you have enough locally for your process plant or not. Those things will start right away as well. And the permitting process.
Right, absolutely. So maybe you can run us through how this looks when you compare it to some of your peers' projects, in the similar size, or even as you said, what some are currently producing. How does that situate this project?
I'd say very, very well. 14-year mine life, you're producing almost 64 million ounces of payable silver over that time. Really good return numbers here. And then that production, the annual production, there's not many standalone silver mines producing that much. As I pointed out, usually it's two or three different mines to get that kind of production up. Unless you're in the the largest top quartile of deposits, so that's a different story. But the vast majority of them don't have this kind of production. Plus, you've got all this upside. You've got that gap zone, which could be adding a significant amount more. And then there's 10 kilometers along that main structure of showings in areas uh, lightly drilled and all kinds of upside on the exploration. So we expect that the mine life here will be decades beyond what the study shows with successful exploration, that being the caveat there. Now, we're only 20 kilometers north of operating mines. And on the mineral trend of those operating mines to the south at Santa Barbara and San Francisco del Oro, they've been mining for almost 500 years, and they're in some cases down to depths of up to 2,000 meters. Now, our drilling's almost all restricted to the top 200 meters so far. So two things about that: great infrastructure. We're so close to existing operating mines. And then what's happening down there shows you what's going on in the districts in terms of how deep these systems go and the potential upside that we have. So very exciting and great advancement for this project.
So room to grow laterally, room to grow with depth.
Mhm.
Yeah, pretty exciting. Room to grow considerably, potentially overall. So
Yeah.
how does this PEA change the company's plans going forward?
Yeah. So we basically now we have two lead projects. We've had Colombo over the last 5 years that were really brand new discovery, that high grade veins, very focused on that because it's the kind of grade and vein widths that work at any kind of silver price once you get enough ounces found. And so we're very focused on that. And we had prepared La Cigarra to be advanced when we got into a silver bull market and silver price broke out, because at $30 and under, it didn't warrant it. But above, now it started to look interesting. Now we see how interesting it actually is. And so that study's now out, and it's going to be a lead project right alongside Columbus. So early fall, we get right to that drilling. If that's successful, we can have a resource update, and then we can follow with updating the PEA with new numbers that would, in that case, be even better. So, and then concurrent, start doing the technical work for de-risking further for your feasibility. So really, that's now become a development project, in fact. whereas Columba's still exploration. We're still building that
Right.
resource that's 54 million ounces. We're drilling away with the objective of getting it to 100 million or more, and then a resource update for it be toward the end of the year, beginning of next year, more likely beginning of next year. And then we'll at Colombo, we'll see how many ounces we end up with after this drilling program that's going underway and decide, is that one ready for a PEA or do we drill more? Meanwhile, we're moving La Cigarra down the path towards feasibility at the same time.
So lots of exciting things going on. At the same time, at Kootenay, what's next in that case for Kootenay? I mean, we've talked about both of these projects. You've talked about how you're going to advance them. Um, is there something that we perhaps haven't covered for you to point out and highlight and where things are headed?
Well, pretty good future here for Kootenay, I'd say, because we got a very clear path on those two projects. We're funded to advance them both, well funded, so we don't have to be going to the market. We just now do the job that we need to do on both those projects. In the background, we're looking at the other two deposits we have, La Negra and Promontorio. So we've got four deposits. And we're just going to assess on desktop studies what silver prices those really start to look good at, and that will help guide us in deciding what, if anything, we're going to do with those in the short, medium term. Short term, full steam ahead on Columba, continuing with that drilling, and then of course La Cigarra, kind of the same thing, but now we've got that positive PA and it's actually a development project. So we've vaulted ourselves, in fact, from being an explorer now to a developer explorer.
Well, thanks, Jim. That's fantastic. Really appreciate all these insights and highlighting, this exciting news from you on La Cigarra with the PEA. We'll continue to watch for ongoing developments, and we'll certainly look forward to catching up again soon.
Yeah, thank you, Peter. We look forward to it as well.